Joining me from the Netherlands is Sem Alberga. He is an investment manager at KPN Ventures. And for those of you that are not familiar with them, KPN is a large Dutch Benelux-based telecommunications company. In 2015, they launched a corporate venture capital fund. At the time, it was a 35 million euro fund. And we're going to talk a little bit about their experiences with that fund. A little bit more about Sem is that he has a corporate finance background, a master's in finance and investments from Rotterdam School of Management, and also happens to be, for many years, an international Olympic level rower. Thanks for joining us, Sem, today. So I think we'll just...
Nice to meet you guys.
Good, and I'll just, our lunch guests today are all representatives of large organizations in Africa, specifically South Africa, that are thinking of or already doing corporate VC in a number of different ways. So what I was hoping is that last year we had a very good conversation between me and Quibus about what was being done at the corporate in the corporate venture capital fund for Imperial, and I wanted to get somebody who had lots of experience with running a program like this internationally and kind of see, well, with more developed markets, and in this case, a program has been running for 7 years. What is different, and what have they done to make that program successful, and what have they changed about the program over those 7 years? So I think, Sem, I want to start off with maybe right at the beginning. I think you've got a really good story about why was KPN Ventures formed? What was the original impetus for the program?
Yeah, sure. Thanks for having me, first of all. A little bit of background. As you probably know, the application called WhatsApp. This became big in 2012 in the Netherlands, and KPN was a bit surprised by it. And you can imagine that SMS revenues came down dramatically, and we were quite slow to react on it. We decided that we didn't want to experience this again, to be not prepared on a very big event impacting our industry. And what we wanted to do is to be inside the boardrooms to see what's coming, and to be able to react quicker. And we basically distinguish two parts of innovation we can impact from our venture capital perspective. From the one hand, you have, let's say, technological advancement. So we needed to increase our technological awareness. So new fundamental technologies being developed into the market, which could impact KPN. So that's from the one hand. We call this technological awareness. From the other hand, there are new markets, new pockets of revenues, which you can unlock if you move quick. And as a big organization, we are often too slow to react on those new opportunities. So we decided we need to focus more on partnerships. So that's the other fundamental of our investment strategy, is revenue enhancement. So create value-creating partnerships. So we invest in companies which develop products which are innovative, which you can roll out in our client portfolio. So this is quicker, and it's a lower risk approach to generating new pockets of revenues. Having said that, we are, as a telco, we are more a platform than a technology company. We don't develop our own IP, or very limited. We have just a very big network, and we have a very large client base, which we can leverage. So that's important to know, is we are totally different than a company like Siemens or Philips, which develop constant new IP, and they do corporate venture capital to get a better inroad into these new IP. So that's a very important difference. So what we do as a fund, we invest from the balance sheet. So we don't have an actual fund. We don't have a limited partnership or anything like that. So it's just on the balance sheet of KPN. And there's currently 100 million committed. So we started off with 35 and then it grew to 70, and recently it was being expanded towards 100 million, and it's a revolving fund. So proceeds go back into our account, which enables us to grow effectively over time by the proceeds we're generating.
Thanks, Sem. Can I ask you a little bit more? One of the themes or an important theme that was in the conversation that we had earlier on is this connection between innovation objectives at the corporate level and what's happening in the fund. Over the lifetime of your fund, how have you managed to align those two with each other?
So yeah, that's important to know that we changed the team about 2.5 years ago. It's also when I came on board. Before that, we were more focused on early stage investments, and now we're more into this revenue generating purpose, and doing a bit different types of investments which are a little bit more mature. We have a corporate innovation department which defines 6 areas of innovation, and we try to work more or less along those lines. So, for example, we have cybersecurity for all. So make sure not only big corporates, but also small and mid-cap corporates, and also consumers can be safe online. Let's put it that way. So we work along those lines. And from the other hand, that's the point with innovation. You never know beforehand what's exactly going to be innovated. So you need some degrees of freedom to also work outside of those areas. And we currently have this freedom. So sometimes we do investments outside these 6 areas. And what we also do is that we combine within the team people with an investment background like myself, and people from the business, because the success of our team is determined by the success our investments have within our organization. So the network within the organization is very important. We need people who know how decisions are made, how new products are launched. So that's a very important part of our team.
Sem, one of the things that we're trying to encourage is for corporates to talk about the things that are working and talk about also the things that are not working. You mentioned that you guys made a pretty significant change to the program 2.5 years ago. Why did you make the change? What wasn't working for you? What are you doing differently now?
Well, we started off doing a bit more early stage investments. What we realized was that oftentimes the product was not ready yet to roll out at scale within our customer portfolio. So for our client base, we needed a bit more mature companies. So we asked approval to do a bit larger deals, a bit more advanced deals, and we are more pushing before we do a deal on a partnership with the business. So to make sure that it's really going to fly, to really going to generate revenues for both our portfolio companies as well as for KPN itself.
How have you, over the life of the fund, and in particular over the last 2.5 years that you've been involved, how have you managed internal stakeholder expectations on what the fund can realistically do and what it cannot do?
Yeah, that's a difficult question. what we try to do is to really under promise, and to involve as much people from the business as possible, and we try to, indeed, what you're saying, to be honest about the fact that it takes time. That's an important thing. It takes a lot of time before you really get traction inside our organization. So that's an important thing.
Okay. So one of the other trade-offs that happens in corporate VC programs is to kind of go, are we investing for the long term or investing for the short term? Do we want to make an impact to existing customers, or do we want to completely overhaul the business? And it's interesting that your program seems to be quite focused on increasing short-term revenue. Why did you take that approach, and why not take the approach of sort of saying, whatever, we want to completely change our business over very long periods of time and invest for the long term?
Yeah, that's a very good question. I think you need to have a bit of a mix. If it takes multiple years before you see any effect of what you're doing, that's then there's quite a big chance that you're not involved anymore, and you need to maintain some kind of momentum. So you need to prove some successes within the business. So that's important. That's an important reason to also focus on the short term. We also focus on the longer term, but we see we have a little bit less traction on our key management level, because they also don't like to rule over their graves, right? So it's also, they need to have successes they can show within the next 2 to 4 years. If you're talking about successes in 10 years, why would they care is the question.
Yeah. Well, maybe related to that question then is that, given these longer term timeframes, how do you measure the success of the program in the short term?
We look at revenues generated. That's an important thing. And we always have the investment performance. So that's another thing. And we look at the quality, so at the qualitative relations which have formed between the companies and the business.
Okay. You've spoken about market access and supply chain integration. Can you talk us through a little bit about some of the challenges and sort of what's worked and what's not worked, and how you've managed that risk of exactly what you spoke about earlier on, where so many of these startups are not capable or not mature enough to realistically drive revenue for you?
Yeah, so we look at some kind of a market proof. So you can set a revenue threshold to make sure there are enough clients who are accepting this product. So that's some kind of a proof of maturity. Also, we have in our due diligence phases, we do a lot of reference talks with clients to see how the product works. But what's another important topic? I don't know if the other companies in the room have the same problems, but we have very packed roadmaps within KPN. So to offer a new product, it needs to go to the roadmap of our billing systems and that kind of stuff, and that can lead to multiple months of delay. So that's also a process which you need to manage very proactively. It's really important for success of your thesis.
Have you had any supply chain integration or market access successes?
Yes, definitely. So we, for instance, I don't know if this is where you're looking for, but we rolled out an IoT network within the Netherlands. So this is a low-powered LoRa for the people who have a bit more background. Network within the Netherlands, which is nation covering. We have a smart monitoring system, which is rolled out in a very a large percentage of the care homes in the Netherlands. We are about to launch an SME-focused cybersecurity solution. We have a cloud orchestration platform which we're using ourselves within KPN. So we are quite happy with that.
Okay, let's talk a little bit about sort of the level of involvement that your team has with the startups that you invest in. How big is the team? How much time are they typically spending with startups? What are you doing with them? What sort of work do you do with the startups that you invest in?
Yeah, it depends a little bit on the phase of the company. So if the startups are a bit more mature, then your tickets are obviously relatively smaller and you have less to say. In some companies we have board seats, in some companies we have board observer seats, and in some companies we have no, let's say, formal shareholder rights, but we only have the discussion as a shareholder. So we have only an informal relationship. The less mature the company is, the more we can do. We have a team with 6 people, of which let's say the 2 seniors, so that's my colleague and myself, do practically all board positions and most of the portfolio work. And that takes us, let's say, 60 to 70% of our time or so. And we have 19 direct investments, and this month probably to grow to 21. So that's quite a handful, but you see that if companies are longer in your portfolio and they do some new investment rounds, our role is less active. So it takes a lot less time to manage that.
How have you thought about incentivizing internal resources for successful outcomes? Like so in a traditional fund structure, it's fairly easy. You get carried interest on a successful investment outcome. Not so easy in a corporate VC fund, particularly with internal resources. So how do you incentivize the right behavior in your team? And in the rest of the organization, actually, to use the startups or to work with them.
Yeah, I think for the rest of the organization, they like to work with young companies, so they don't need any financial incentives or anything like that. I think for also within the team, the type of work they're doing is really incentivizing for them. So they like that. You definitely need to have some financial incentives as well to prevent the team from walking away. Turnover in these types of positions is often quite high, because the market is paying them really, really well, especially when they get carried interest in that kind of stuff, which is something we cannot offer. But you see different models within the different corporate VC funds. So it ranges from bonus structures to, let's say, some shadow carry to full carried interest. You need to find a way which fits the team.
Okay. How have you, shifting gears a little bit, how have you managed the internal expectations around the high startup failure rates and the relatively low success rates in the portfolio? Or is that one of the reasons why you underwent the restructuring?
Well, we had in the portfolio so far only one bankruptcy, so we were lucky there. And we had I think 6 exits so far, which probably 3 or 4 to follow this year. So that is quite easy, but what we try to do is to get long-term mandates to dampen these shocks a little bit, and to give the team let's say longer runway.
Okay. Do you view the corporate VC program as an M&A channel, and how successful has it been as an M&A channel?
For us, not. As we are not actively looking for new IP, VC is not very suitable as a channel for M&A. in partnerships, we're looking for scalable solutions which can easily be scaled beyond the borders. And as we are, as a telco, only active in the Netherlands, if we would acquire such a company, we would only limit the opportunity of the company. And that's what we not like to do. So we have no interest at all at full acquisitions.
Okay. Last question from me, and then I'm going to open up to some questions from our attendees here. What are the 3 most important things that you think another corporate thinking of starting a corporate VC program should consider before they start?
What actually happened within KPN is that they did a deal before they started the official program. And that makes things easier. What you often see is that new teams are formed and they appear not to be able to do an actual deal, because within the company, not everyone is aligned on how the deal should look, which risks they are prepared to take there, and they are stuck in the analyzing mode and never get into the execution mode. I think that's the most important risk I see around me.
Okay. Any others that you can think of?
Yeah, so I think the connection with the business. So if you take a typical high flyer from the investment banking world and put it in a VC position, there's often a large disconnect with the rest of the organization. It's very difficult to get support there, and there needs to be someone who can create that bridge. And so this cultural sensitivity for the organizational values, this is really important to have within the team.
Perfect. Thanks, Sem. I'd like to open it up for anybody that would like to ask any questions, and then I'll relay the question through to Sem. Yes, of course.
So one of the things, I work for a bank, and obviously return on investment always feels like the big measure of success. But having done an accelerator in another bank, I don't think that's a realistic metric that actually lands. And I just wondered if you had maybe just to sum up 3 success metrics that you look for when evaluating your program.
Sem, did you hear the question?
Yeah, so what the key success metrics are in evaluating the program, right?
Yeah.
Yeah,
yes.
So it's basically, there are 2 groups, right? Financial performance and strategic performance. Financial performance are the obvious ones. So that is return on investment, money multiples, stuff like that. What we see in strategic performance, if you need a metric which shows you apples for apples, and that is quite difficult. On the short term, revenues generated, that's the most obvious one. On the longer term, yeah, we stick to, and that's difficult. And I understand your question absolutely. To have clear quantitative KPIs for the longer term, I cannot answer this question, to be honest. We look into more, let's say, qualitative metrics than quantitative.
Any other questions?
So my question is really, when you're looking at corporate investment, corporate venture capital, do you focus locally, and do you feel it's best to focus locally, or do you focus? Do you think that there should be a focus on global opportunities?
Thank you.
Yeah, that depends a lot on the phase which you're looking in. So if you're looking to more mature companies, you can, especially when it's scalable software, then the location is not so important. If it's a bit more early stage, I prefer to have them closer by. It's easier to get the connection to the company. It's easier to mentor them a little bit, to get a grip on the development of the company, and to have enough priority on your own geography. So that would be the answer I would give there.
I think if I heard you correctly, you said you did 6 disposals this year. And my question would always be that disposal is almost a failure to some extent, because it means that the business didn't end up being the WhatsApp competitor or disruptor to your industry. So do those businesses end up sold because they didn't turn out to be the disruptor, relevant to your industry? As a typical venture capital fund, you'd think that's great success. We've sold 6 businesses, that's great. But as a corporate VC, you'd almost think, okay, these things didn't turn out to boost my business and add a new dimension or add a new technology. So how do you think about that?
Yeah, there are a little bit less. So we are currently at 3, probably growing towards 5 this year. And I think all of them didn't manage to have a successful partnership with the business. Having said that, financially, these were very good deals. Pretty much all of them. Yeah, I think all of them. And it doesn't rule out when you dispose it that a partnership, which is the holy grail for us, to have an effective revenue-generating partnership, it shouldn't end at the time of a disposal. So we are. The informal connection is really good when you have been in the portfolio for a couple of years. It's a really effective way of doing business, which can still survive the disposal. So I do not agree, I think, with that, calling that a failure. That's not how we feel it, let's put it that way.
Just a question on who you tend to invest alongside into your portfolio companies. And as a corporate VC, how does that dynamic work with perhaps traditional VC investors, or does it put some people off? Do you find it easy to work with some parties? Do you end up investing alone? How does that play out?
We have quite some cooperation with the other telco investors. We did only a limited amount of investments together, but this is an important channel also for new deals. You have let's say, the tier 1 venture capital companies in the US. Usually they are a bit hard to reach when you don't have enormous amounts of money to spend. Current downturn is a bit of an opportunity to get on board, which we are using so now and then. We have also a lot of local government-linked investment funds we are working with. Also local, a little bit of smaller VC funds we are working with. We are quite opportunistic, basically. So it's a very large landscape. Our idea is, if we are successfully rolling out this revenue-enhancing strategy, we are convinced that more and more larger VCs will come to us to use our client portfolio for their portfolio companies.
All right, thanks, Mike. I've got 2 questions. The first one is, what is the relationship between yourselves and your innovation team? And how does that work in terms of bringing in portfolio companies into the business? Do you go through the innovation team, and what role do they play there? And then the second question is, how do investors treat your on-balance sheet investments into startups? Do they analyze them, or do they kind of try to figure out whether you paid too much for it, etc.? Thanks.
Yeah, I'll start with the first question. The innovation team, they are actually paving our way. So they are preparing the organization for new ideas. And the portfolio companies we bring in is a way for them to execute. So they have a role to streamline this a little bit towards the business, but they have no official role there. they just set the direction which we can follow if we want. So that's on your first question. And the second question, I didn't fully understand it. So maybe Llew, you can.
Yeah. So the second question was, let me know if but it was essentially related to the finance team and fair value of the investments on the balance sheet, and how much do they interrogate the investments team's assumptions and I guess investment case. Is that correct?
Correct. And external investors as well. So how do you...
External investors in your company.
Yeah.
Okay.
On KPN.
Yeah. So KPN investors and internally.
Before we do a deal, there is no interference from our control department. So we just tell them we've done a deal and then they account for it. During the lifetime, we basically follow external valuations. So if a new investor steps in at a certain valuation, we follow that valuation. That's what we basically do. That's quite of an objective approach. If the valuation is too long ago, then we sometimes, if there's a very good reason, we adjust. But this is after we've talked to the to our corporate control department, and it's most of the times at our initiative. So they are very supportive, basically. And following our initiatives.
I think the second question was just related to that was, have you had any issues with analysts that are following your company saying, we want more information about the 100 million euros that's sitting on your balance sheet as startup investments?
No, it's I think our balance sheet is far too large for that. So yeah, just too small.
Thank you.
I think I'd like to understand, have you incentivize or try to create an environment where there's partnerships between the portfolio companies where they can work together to enter new markets or create new products because they're